All right, we are recording. What's going on, man?
Much. How you doing today, Quincy?
I'm all right, man. Just normal Chicago stuff. What is this? Do you hear that reverb?
Yeah, that's my computer. I can lower it down. Maybe this. I don't know if it's my computer or not, but I lowered it down a bit.
Okay, yeah. You know it's snowing down up here, and it's dude. Like I spent 2 hours digging my car out yesterday. It's just I don't know, man. I know it's way better in Florida than it is.
Yeah, it's got its advantages of being out here, but the thing about being in Florida, like I'll tell people, yeah, it's 50 degrees and I'm cold, and people are like, well, you're from Chicago, you should not be wearing a hoodie or whatever. But the thing about Florida is that the weather here is like very unforgiving in the sense where you don't know it's going to be like 30 at night unless you look at the weather. And it could be like 80 during the day and then 30 at night. And you're like, whoa, what the hell happened? I'm cold. So, yeah.
Yeah, but so wait, I didn't introduce. I always forget to introduce people. So this is Andrew Luna.
Hello.
I would like to say expert in investing and, well, specifically what stocks and cryptocurrency. All right. So what makes you like the? What is the word? Would you call yourself an expert?
I don't know if I would call myself an expert because if I was an expert, I'd have millions of dollars. Just usually how it goes. But I've been in a situation where I've had millions, or I've made millions, but yeah, there's certain things that I did. Like I'm still learning like everybody. So I wouldn't say I'm an expert, but the thing is I know enough now
Mhm.
that I'm able to make money where it's enough for me to like be satisfied and happy with.
So, okay, that makes sense. So you can live off of it. Like,
Exactly.
would you call yourself a day trader? Is that
So I would and I wouldn't. So the thing about day trading is that it's an interesting term because when I was younger, I used to think of day traders like these dudes who sit on a beach all day, like in Thailand or somewhere like Mexico, and they just like trade stocks and stuff all day. And the reality of it is that it's not that glamorous. It's just like sitting in front of a computer all day staring at charts and trying to make like $2, $3 here and there. But there's a lot of pros and cons to day trading.
okay? So before we get into like the pros and cons, like can you
Right.
tell a little bit about like your history? You don't have to tell everything, but like, just
Sure. Yeah. So I got into stocks one day because I was at work and my coworkers were talking about stocks. And I was like, hey, I want to get involved in stocks. How do I do it? So I signed up for an E-Trade account back in like 2009. Well, I feel old. 2009, I signed up for an E-Trade account and I bought some stocks. So I just bought like one share of Amazon at the time and I bought some Rackspace and just a couple other tech stocks that I liked, like Zynga. And yeah, I went with it. I didn't put a lot into it. It was like maybe 5 grand. That's pretty much it.
yeah.
And from there, I noticed things were starting to go up, and I was like, "Hey, this is kind of interesting." So yeah, that's how it started. And then from there on, I started getting into crypto around like 2017, 16. I had an interest in learning about the technology with crypto, but I can see like there's a huge difference between crypto and just regular, trading stocks. So I can get into that too.
Yeah, what's the difference?
So the main difference with stocks and crypto is the fact that stocks usually happen around business hours for most people. You can trade off hours, but you can't not trade on like weekends or holidays. So if you have like stocks that you want to trade on like Christmas Day, for example, you can't trade them. So you
Yeah.
have to wait till like the next day, right? Whereas with crypto really defines the term money never sleeps and time is money. Because even as we talk right now, the crypto market is moving up and down.
Yeah.
I think the thing about it is very Wild West because there's no regulation right now with it. And I mean, even when I got into it, it was really weird because a lot of exchanges where you go to like basically buy coins. You take US dollars or whatever centralized currency like yen, pound, whatever. You go to an exchange, you sign up. And back in the day, you would just sign up. You didn't need any like social security or driver's license or whatever. You didn't need to prove your identification. It's called KYC, know your client or know your customer. But now, like all the exchanges pretty much require it for regulation and tax purposes. So the thing is that once you do that, once you sign up, if you make a certain amount of money on there, if you hold a certain amount of money, you get tagged right away, and then your stuff, like whatever trading you do, gets reported to the IRS. But the thing is that another difference is that with stocks, when it comes around like time now, like February, right? They'll
Yeah.
give you a tax form. They'll show, hey, this is how many trades you made in a year. This is how much money you made. Whereas with crypto, they don't really do that. They're starting to now, but the forms that they're giving you are not great, because the forms that they provide basically take your gains and your losses and sum them together as if they're all gains. So like you'll get a form that shows like you made like $600,000, even though you might have made only like 100 grand, for example, with crypto. So that's the other part that's rather difficult. And then another thing I wanted to mention is the fact that when you do trade crypto, you have to keep track of your trades. And a lot of times the exchange will provide you with like a history of your trades, but it's good to just document it on your own too, because you got to do that on your own. Whereas with stocks, like I said, they provide that document that has all the stocks and companies that you traded with. Whereas with crypto, they don't do that. So you got to keep track of it. And it could, like if you day trade crypto, which I don't advise doing anyway, but if you do it, you can have like a list of like over 1,000 transactions through the year. And it's just like you got to keep track of it. And then it gets really like it just becomes a tax nightmare at that point.
Wow. Yeah, I know. I got a like a BlockFi account, and I was trying to figure out like I only made like 3 transactions over the last month, and I was like, I can't really like it's hard to read it because like it's in USD and then it's in Bitcoin and it's like all
Right.
these dots and I mean not dots, but all these zeros and all of that kind of stuff. And I'm like, but so what would you said you started back into when did we meet? Like we met like in 2000, it had to be
Yeah.
2008, right?
Maybe 8, yeah, maybe 9. I think it was like 2009, 10. It was around that time. It's been over 10 years since I've known you.
Yeah. And you started, so you started this after you knew me. You could have told me about this a long time ago, but I
I
knew you
know.
was online talking about crypto. You was like screaming on the top of your lungs about crypto, but you never
Yeah.
talked about the stocks though.
Yeah, the thing is like I've always had an interest in stocks, but the other thing I wanted to point out too with stocks and crypto, like one of the differences that I'm noticing is that stocks are like dinosaurs. And I mean, they take forever to move. You'll be looking at a chart or a stock for the week, and depending on the company, of course, but like that stock might not even move like a couple dollars. It might just move like $1 or 1 cent, right? Whereas with crypto, you'll see money come and go like that. Like depending on the coin, of course, but like if you have Bitcoin, for example, right? I've seen Bitcoin go from like 3,000 to $800 in like a split second. They have crashes and stuff, but then sometimes it'll just drop like 20, $30 here and there. And one of the main differences is that like when it comes to stocks, 1 to 3% is great for like the week, especially if you have like a 1 to 3% gain in a day, that's amazing. Whereas with crypto, 1 to 3% is like happening every second. So
Yeah.
what you look for in crypto is anything over like 10%, for example. If you see 10%, and that's a great moment, I guess, because there's no such thing as a day because it doesn't ever stop. Like you could be sleeping right now,
Yeah.
somewhere in another country, and like the whole market can tank. So that's another scary thing. And it can become an addiction. Like I used to be addicted to it where like in 2017, I was constantly looking at my phone because I'm like, oh my God, wait, what is it doing now? What is it doing now? And my advice to people is not to get addicted to it where you have to look at the charts every day. And that's why I advise not to day trade it. Because if you day trade crypto, you might fall victim and prey to making like rash decisions. Like for me personally, when I first got into it, I bought 5 Bitcoin at $600. And then it went up to $813 one day and I sold it. I was like, oh my gosh, it's up. I was like thinking of like a stock guy. So I sold it. And then shortly after, by the end of the day, it was at over $1,000. So
Oh man, you were like,
yeah, that's what I'm saying. That's because I looked at it all the time, and you don't want to do that. I mean, some people do want to do that, like if they don't want to be in the market, but there's other things that can happen when you start to do that and other complications.
wow. Wait, so let's go take it back to the basics. I mean,
Sure.
a lot of people don't even know what crypto is, dude. Like, what is a cryptocurrency, man?
Yeah, sure. So cryptocurrency, so there's a lot of like rumors behind like who made it. Like some people say the CIA made it, Elvis, I don't know. It started because some guy who goes by like his name, what is it? Satoshi Nakamoto. He supposedly like made this thing. It's this coin basically, it's a cryptocurrency. And I'll get into that whole thing too. But the thing about crypto is just, I mean, the whole thing blew up. You have like this technology behind it where you can mine coins and you can accumulate coins for just by mining it, leaving your machine on, and you obviously you have to pay for electricity. And then once you get those coins, like you can, the logic behind it is you can use it to buy things. And whatever you do within when you have those coins, like say I send you like 1 Bitcoin, that transaction gets recorded into something called the blockchain, which is like a record. It's like a ledger. So anybody could look up that record by looking up the transaction. So when you send something or buy something or deposit anything that you do with your crypto, it gets tagged into the blockchain with a transaction. And then you have to like pay a certain fee. Certain coins have higher fees where some don't at all, or like some like you pay like a penny to move like $1 million, for example. So that's the other thing behind it. And the technology is cool because like if I were to send money to somebody, it takes like 5 to 6 business days, right? Depending on how much money it is. Like you could be sitting there for like 2 weeks in some cases, depending on the bank. Whereas with crypto, depending on the coin, I mean, it could take like a millisecond to like maybe like a couple hours to send like a large sum of money. So that's the logic behind it is you can send a lot of the coin to somebody in a shorter amount of time in comparison to a dollar. So
So, like you said something about a machine and electricity. Like, what is like? Why do you need a lot of power to have coins? Like, or why do they even call it a coin? It's not a coin you can hold in your hand. Like, what is that about? I mean, I have an idea, but like, I don't know.
sure, sure. So yeah, the logic behind mining is you basically like have your computer. I mean, just to explain the simplicity, you have a computer running, right? And you just have
Yeah.
your computer running and it's constantly looking for bits and pieces of the coin of whatever you're doing. And the thing about it is that the more scarcity there is of a coin, because one of the main differences between crypto and like US dollars is that, we all know US dollars, you keep printing this stuff out like it's monopoly money. It pretty much is, right?
Yeah.
You see the machines of the thing coming out, right? And there's unlimited supply of it. And the logic behind crypto is that because there's only a certain amount of coins, like let's talk about Bitcoin. So like with Bitcoin and Bitcoin Cash, for example, you have like 16 to 18 million coins. That's it. And once those coins are all out there, I mean, that's pretty much a free for all. And if you have one coin, because of the scarcity, the logic behind it is that because there's a scarcity with those coins, they become more valuable in the long run. But I see a fault with that as well. So I mean, yeah, I could see why, it's more valuable, but because you have that value that's attributed to it, people start to not want to use it in that sense. Like some people might start spending it or whatever, but then like the more rare it becomes, like how many people are really going to use it as a currency?
Oh, what do they do with it? They just store it like as their own value, but I guess isn't that tied to their like let's say I had some Bitcoin, right? And I was like, I don't want to spend this because it's rare.
Right.
But I don't know, let's say that the world like becomes fucked up or something and I need like some value, like I need some money to like eat or something. Like I guess the question is like how can you or people it sounds like people are storing it like gold or something. That's what it feels like you're saying that people treat
Yeah.
it like it's gold.
Yeah, and that's exactly what's happening right now because of the fact that, all this money keeps being printed out with US dollars. People are putting their money into Bitcoin and other coins because of the fact that, I mean, not only because money is being printed out, but let's be honest here, bank accounts, right? Savings accounts specifically. What is a percentage on savings accounts right now? It's like barely a percentage, right? I mean, some banks might give you 1%. I
Yeah,
remember growing up, I mean, it was like 5, 7%, and that was
yeah.
awesome. Now that's totally unheard of. So because of that logic too, people want to put their money somewhere where it'll grow. So what they're doing right now is they're using these coins like a store of value. So they're putting their money in Bitcoin. And I think it's because all these other institutional investors are doing it now, and it's not just retailer investors. The price of Bitcoin has grown exponentially. And the thing about it is that every 4 years, it becomes harder and harder to mine the coin because they just start to do this thing called a halving, which basically means that it just makes it harder to mine. And it's not just Bitcoin that gets halved. It's like Bitcoin Cash, Zcash, and certain other coins too, like go through this period. And because that happens, you have to factor that in. That's also increasing the value. And my thing is like when Bitcoin first came out, this guy, you probably heard the story, he spent like 10,000 Bitcoin to buy a pizza. He bought like 2 pizzas with this, right?
Yeah, I remember that.
Yeah, so he did that to test out the technology because at the time, no one ever sent a transaction before. They never used it as a currency. So this guy spent 10,000 Bitcoin on a pizza. Now, you might be saying, oh my gosh, that's worth like $1 billion now. And yeah, it is. And that's my argument with crypto is the fact that people know that, it's worth and it's going to keep going up, worth more in money, and it keeps getting, growing in value. So my argument is, yeah, as long as it's tied to U.S. currency or U.S. dollar or like pound or whatever, or centralized currency, how many people are really going to use it as a currency? Like knowing the fact that if you buy like a video game with one Bitcoin and say like at the time it's worth $60, and like 4 years later that one Bitcoin's worth like $30,000. I mean, would you be kicking yourself for doing that? I'm sure.
Buying a video game, yes. Oh, so
Right,
that, it makes more sense to just store it and not use it. So that's
right.
not holding it back from becoming an actual currency.
Exactly, exactly. And the thing is, like, what I'm learning now is that fact that you have other coins that are out there, like you have Bitcoin Cash, for example, where it is basically Bitcoin in a sense where there's a scarcity as well. But the difference is like when you transfer it to people, there's a lower transaction fee, and it's fast too, and it's not as like expensive, obviously price wise. It's like $450 to $500 right now. I mean, it's gone up too, but the thing about it is that even if you take Bitcoin Cash or like another coin that's out there, that's going to go up in value too. So eventually, like all these coins are going to be worth a lot of money, like certain coins. So my thing is like if they really want to use it as a currency, then they need to find that one coin that's like has enough as far as like scarcity is concerned for everybody to use it. And it's like the value is either not tied to US currency or fiat in general, and or like people are like US, like say like the US dollar collapses and then it's like worthless and people won't really care. But as long as like people are using this as a vehicle for investing, I don't see this as ever becoming like a real like currency because sure, certain people might use it, but like is everyone really going to use it? That's the question that I'm asking right now.
I've never heard anyone say that before. Wow, that's something. So you use the word fiat. What is a fiat currency? What does that mean?
Sure. Yeah. So fiat is interesting because like when I first heard it, I thought of a little car, right? The car that's the size of
Yeah, yeah, the car. Yeah.
right. I actually used to own one, and let me tell you, that car is like a shoe. I mean, I had
The
like,
Scorpio car that you used to have?
yeah, you remember that?
Yeah. I remember without the sushi.
Yeah,
And you had the little your what is it called? The clutch was like it had a
the stick shift, the stick
yeah,
shift. Yeah, the shifter had the scorpion in there.
yeah, it had a little scorpion thing on
And I mean, that wasn't comfortable. So like, if you take that logic though of fiat, like, something that's not comfortable, right? So you have US dollars, right? So I'm going to pick on US dollars. I just have to. So think about US dollars. It's a very interesting concept because first off, it's not made out of paper, right? It's made out of cotton, right? I mean, it's not even paper itself. The fabric is
it.
different.
I didn't even know that. It's made of
Yeah,
it's cotton, not
it's cotton and something else. I can't think of the it's yeah, it's made mostly cotton.
yeah.
So it's not even like it's not even paper. And the other cool thing of like really crazy thing, I wouldn't say it's cool, but the crazy thing about the US dollar is that when you hear someone say like this is my money, technically it's not their money. So like the thing about the US dollar is that it can be taken away from us, right? Like we don't really own it. It's borrowed debt because it's backed by debt, right? And it's back in the day, like it used to be backed by gold, but now it's like it's not even like worth anything. It's like it's worthless basically, and it can be taken away from us. Like you can be in a situation where like if you owe like the IRS money, right? They could basically take that money away from you. Like you don't even own it. And that's the thing about like the logic behind crypto as well, is that you can put that into your, you can have like a hardware wallet, or you can take like a piece of paper like this, and you can have like your crypto info stored on a piece of paper. That's the crazy thing about crypto too. And that's just the technology that I like, is the fact that it eliminates the middleman. It eliminates the fact that you don't actually own the money, because you do with crypto. You own your coins. And when it comes to like wallets, like say you have, $10 in your wallet, right?
Hmm.
Say you lose your wallet. Well, what happens if you lose your wallet with those $10? You're screwed. With crypto, like if you have certain wallets, you can get that money back as long as you know your passcode. So every wallet, like I'm gonna pick on a hardware wallet. So you can get like a Treasure wallet. It's a company called Treasure, Trezor.
Treasure
And
wallet.
yeah, you can buy like a hardware wallet from them, and you can put your coins on there. And when you get your wallet, so if anybody out there does buy a wallet, I'm going to tell you right now, always buy it from the source. So if you're going to buy a Treasure wallet, get it from Treasure. If you're going to get a Ledger wallet, get it from Ledger.
No secondhand wallets.
Right, because what happens is when you buy a wallet, like see, it's really small too. You get a wallet, it's going to give you like a seed, which is like a 12 to 24 words. And those words are like a recovery passcode. So if you ever lose your wallet, you can use that to recover your wallet and your coins. And what a lot of people do is they'll sell wallets with the code already generated. So then when you store your coins on that wallet, what they'll do is they'll go into the interface, they'll upload those seeds or that secret code, and they'll take those coins from you because it's basically their ownership. That seed basically says, this is my wallet, this is my ownership, this is my recovery. So I've read stories of like people having like a bunch of like coins on their wallets, and people that they purchase it from will end up stealing it from them. And, they're basically screwed. So, yeah, I mean, like I said, this is a wild west. You got to really know what you're getting into
So
before you.
what do you mean? So all right, there's a lot of questions, dude. Like, so first of all, there's the wallet from Coinbase. That's like a digital wallet, and I've read
Right.
that there's physical wallets too. What is the difference in between those?
Sure. Yeah. So like all the exchanges have wallets. I mean, they're not really wallets, but like they're their wallets. Let's say that. Let's just say, when you buy a coin on like Coinbase, for example, right? It's stored on their exchange. It's on their exchange. It's on there. So it's not really your wallet. It's their wallet because you're storing it on their exchange. So like if that exchange ever gets hacked, or if you can't log in, or if you lose your accounts or whatever, if somehow you cannot access your coins for some reason, those coins are gone because it's on their exchange. Now, if you buy like a Ledger Nano, for example, that's like a little USB stick. It's like the size of a USB stick. You
Uh-huh.
put coins on there, and if you lose that, if you break it, I've broken mine all the time. You just buy another one, and then you just put in that secret passcode, and you can recover your coins.
What? Okay, whoa, I can't. So if you can buy a physical wallet, right?
Yep.
You can store your coins on that. With that terminology of a physical coin is still kind of nebulous, but we'll
Right.
work with it. So you store your coin on this physical wallet, right?
Right.
You can break that wallet, but all you have to do is buy another one and use the same passcode.
Right. As long as you remember that, it's like 12 to 24 words. As long as you know that, you can recover your coins.
What if you forget that 12 to 24 hours? Then you're screwed.
Yeah, you're screwed.
Wow. So there's no last pass for wallets.
No, there are other types of wallets out there, but I mean, just to keep it basic and simple, I'll just talk about these wallets because these are like wallets that anybody can use. These are not as complicated. It's just like plug and play, really.
Okay, plug and play wallets. Wow.
Yeah.
So is there is it like storage space on these wallets? Like, can you hold up to a certain amount of coins? Is that the way they work?
Yeah, that's the way it works. So like if you buy like a lower grade, like for Ledger, for example, they have like a Nano S and a Nano X. The Nano S, I think it holds, depending on the coin, it holds like 5 to 7 coins. Whereas like the Nano X not only holds more coins, but like the technology behind it is a little more advanced in the sense where it has like Bluetooth, so you can hook it up to your phone and you can like see your wallet interface on your phone, so you can like do physical trading. And the thing about it is that I mean you can store your coins on an exchange if you want. Like if you don't have a whole lot, if you have like say, let's just say you have like one Ethereum on there, right? And you can actually use like I know with Gemini, which is an exchange based in New York, they allow you to have this thing where you can like scan your phone and like a QR code and you can send like money to somebody. You can use it to buy things. So there is a lot of push to start using this as a currency. But I mean, it, like I said, in order for people to start using it as a currency, the price needs to be ignored. So it's because the technology is there. And I mean, it's great to use as a currency because it's fast and it's simple, and you don't have to like, it's like with credit cards, if you pay a merchant, right, that merchant has to wait like 3 to 5 business days in order for that money to come in. Then they get like a transaction fee on there, right? Whereas with crypto, the transaction fee is lower and it's quick. So
Why is there a difference in between like real money and like crypto as far as when that transaction is handled?
yeah, it's because it goes through the bank, right? When you have a credit card, usually it's with the bank. It's like Visa or whatever. It goes through them. So I mean, you got to wait for them to clear it. They do a lot of. I mean, that's where things can get kind of weird because there's security behind it. They want to like regulate it. Whereas with crypto, I mean, it's just between you and someone else. There's no like middleman.
And the transaction is on like the blockchain.
Correct.
So all right. So with the blockchain, does every crypto have its own blockchain? Is that the way it works?
Yeah, they have their own blockchain. So like the thing, the scary thing about this is that if I give you a dollar right now, right?
Uh-huh.
Person, I give you a dollar. No one's gonna know I gave you that dollar unless you tell people or I tell people.
Yeah.
Now, if I give you a dollar in crypto, if someone knows about like your wallet address or if they want to look up that transaction, they'll know. So everybody can know about that dollar. That's the huge difference.
Okay. So it's like a huge ledger. What?
Yeah.
So here, I I think this is going to be a trick question. I don't know. You may know the answer, but what if I wanted to come up with my own crypto? Because I hear about Dogecoin and all of this other stuff.
Okay.
Like, what if I was like, hey, I want to come up with a funny coin name? Like, I see companies coming up with this stuff all the time. Like, how do you what do you need to make a coin?
Right, right. So yeah, I mean now it's a little more tougher because regulations are a lot more strict. But I could tell you in 2017, everybody and their mother was making a coin. And
Really?
yeah, it's called ICO. So what that is, it's called it stands for initial coin offering. So what that is like if you have an idea to make like a Quincy coin, right? You build a website, you make it snazzy, you say, hey, I have an idea for Quincy coin. I'm gonna offer like 1,000 coins or whatever. I
Yeah.
just, this much money behind it, if you can invest in it, and you're going to get some coins back and it'll go on the exchange, and it's like an IPO. When you put the stock out there, people are going to invest in it and it's going to go up. That same logic applies to coins. So when it goes out there in the exchange, people are going to buy it. And I mean, a lot of times, like I saw this coin, what we call shit coins. Shit coins is basically a term for coins that are like worthless.
Yeah.
With like a Nicolas Cage coin, and it was called Cage coin, and this thing grew like 3,000% or something ridiculous in like a day. So yeah, now like I said, it's a lot more harder to do that because people got ripped off. Like a lot of people who invested in it didn't get their money back. They didn't see like any wealth from it. They didn't double their earnings or anything. So there's a lot more. It was more riskier then, and it's a lot more harder now to do something like that.
Do you need like developers or something to make a coin?
Yeah, I mean, you need developers to build it, to put it on a, to basically build a coin. You got to build a website, and then you got to create a blockchain for it. Basically, you got to have the code for it. I know, like Charlie Lee, for example, he basically took like Bitcoin and then like modified the code behind it, and he made like Litecoin, for example. So you got to know what you're doing. You
Yeah.
got to some code behind it. You can't just be like, oh, yeah, I'm going to create it on my own. Some people do have created it on their own, but like I said, now it's a lot more harder to do that, which is good in a way because people got ripped off before.
So if I was gonna buy some Bitcoin today, like who would I trust? Should I go to Coinbase or Gemini or where should I go?
Yeah, that's a good question. So the thing about it is, I used to have a Coinbase account, and I got off. Well, I actually ended up getting like locked out of my Coinbase account. I couldn't even recover it because I break everything, right? But luckily, I had no coins on there. But yeah, I use Gemini. I've been on Gemini for a bit, for what, 5 years now, and I've had no issues with them other than the way they report like your I guess what I want to say, like the way they report your, like when it comes to tax season, when you have your tax forms, like the way they report that stuff isn't great. That's the only issue I have with like Gemini and Coinbase. But other than that, like Gemini support is really good. In comparison to Coinbase, though, they don't have as many coins as Coinbase does. There's Binance, which I actually don't recommend because I know a couple of people who got locked out of their accounts on there and they weren't able to recover them. So, and the thing about these exchanges too that you have to keep in mind, there's no like phone number for you to call anybody. You know, you got to do everything by like email and stuff. So it's another scary aspect about it. That's what I'm saying. Like, this can be a huge nightmare if you like people really need to know do their research and know what they're getting into because of the fact that yeah, you can make a lot of money on it, but you can lose just as much money. And then once you start factoring the taxes behind it too, I mean, the tax guidance isn't that clear right now. They just started putting that question on the tax forms, like asking people whether or not they moved cryptocurrency in the last year. You're supposed to check yes or no.
Oh man. So I have cryptocurrency. I have to report that on my taxes.
Yeah, you definitely do. And it's crypto to crypto and crypto to fiat. It doesn't matter if you like take the money out of your exchange. If you sell for anything, and it's a taxable event, regardless if it's a loss or not. I mean, if it's a loss, you won't, it's taxable, but you won't get taxed on it because it's a loss. But yeah, and they can look it up too. Like if you hit yes, or even if you don't hit yes, like if you make, I know some exchanges it varies, but if you have like $10,000, $20,000 on your account, it gets reported to the IRS. So they're gonna know. And because everything is in the blockchain, they can see exactly what you're doing. So there's no way around it. There's no way to hide it.
Oh, wow.
Yeah.
That's very interesting. Dude, this is a lot of information. But all right, so let's go back a little bit back to the stock.
Yep.
Now, when I when that GameStop stuff happened, dude, people were calling me about that. Like, um, I'm trying to figure out, do we need to go over the GameStop thing? Are people asking you about that?
So yeah, the funny thing about GameStop, so I'm gonna let you in on a little secret. I actually had GameStop stock. So yeah, the thing about my story with GameStop is really funny. So I knew that subreddit Wall Street Bets, I knew it existed, but I never paid attention to that stuff because like when it comes to my own investing, I don't like outside distractions coming in. I
Yeah.
like my own thing, develop my own strategy and follow it. So what I did is I remember 2019, I read a story about that Wolf of Wall Street guy. He bought a bunch of GameStop. And I was like, huh, that's interesting that he did that. So I looked at the price at the time, it was like $2. And I thought about it. But then I did my research and I'm like, well, they're closing stores. They're not really like profitable right now. Why am I going to buy it? So I waited up until like last summer. I revisited it and I saw that PlayStation 5, Xbox was coming out, right? The new systems,
Yeah.
holiday coming up. I said, I'm jumping in on this. I'm buying some stock in GameStop. And at the time, it was still pretty cheap. It was under $10. So I got some. And then at the end of the year, when it came to December, because I didn't want to deal with this next year for the year after for my taxes, I'm like, well, it's the end of the year. It's up to like what, $20 or whatever. I made a decent amount of change on it. I'm selling it. So I sold it. And then a buddy of mine, a couple of weeks ago, he's like, hey, do you still have that stock? It's like $60. And I'm like, whoa, why is it $60? I was like, wait, what? Because I read charts. Like I can see where things are going when I look at charts because that's just what I do. That's part of my strategy. And I didn't see that in my charts. I saw it come down and it did go down after I sold it, by the way. So then I'm like, well, they're closing like 2,000 stores this year. Why is it even up? So then like I started to do research and I saw what was happening. And the funny thing about that GameStop thing is that that happened in 2008 with Volkswagen.
Oh,
So
really? It's the
yeah, and
same thing happened?
the same thing happened. I don't know if there was like Reddit was involved or not, but yeah, like a bunch of people basically made the stock shoot straight up and it crashed, shortly after, like what's happening with GameStop. The only difference between then and now is obviously the economy is different, the situation's different, but I mean, the charts are pretty much the same. It's just a different company. So yeah, I had people like reaching out to me, asking how to buy it. And my advice when it comes to investing is never buy something everyone else is buying that's on a full.
Yeah, you're right. You're right. Like I hate that. It's it's just a bad strategy, man.
It is.
Every stock that I've succeeded in, and when I say succeed, I mean just made a profit, has been something I've come up with, or there's one group of stocks that was told. I mean, it was someone told me to buy them, but
Right.
like most of them is like number one, most of them are companies that I'm familiar with that I work with on a daily basis. So I understand that I don't have to do a lot of research because when you start trying to do research and learn about an industry you know nothing about, that gets kind of weird. I don't know. Well, at least for me. So
Yeah, no, I agree. It does get weird. Like if you don't know a lot about it, it's funny because a friend of mine back in 2013 when Tesla went public, he's like, "Hey, are you gonna buy Tesla?" And I'm like, "Nah, I ain't buying that. It just, I never buy like stocks when they first come out." And at the time it was like 18 bucks, and I was like, I'm not gonna get it. And it shot up to like $36. And I'm like, no, I ain't getting this. And yeah, I did get it shortly after, but I just held on to like 300 bucks. And I was like, oh, I got 300 bucks. Cool. So yeah, now I'm more aggressive though when it comes to investing. And I developed a strategy. One thing I could say is like when it does come to investing, you always want to have like a notebook or like some sort of sticky paper by your computer or wherever you're doing your investing. And you want to, like I said, write down some questions to yourself. So like if you are going to develop like some sort of strategy, you want to ask yourself, the first question is very important. It's like, what is my strategy? What am I doing this for? Then you want to ask what your goals are for. And then you want to know like, why are you even doing this? Because a lot of times people, when they buy a stock, they'll just buy it. They don't think about why they're buying it. They're thinking, oh my God, I'm going to get rich. That's what they're behind it. But that's a bad approach.
yeah, I know. Definitely not gonna get rich. Just trading one stock. So there was something else I wanted to ask you about this about stocks. Like you said something about like Tesla.
Yeah.
Oh, this is what I want to ask you. The last time I talked to you, you always mention every time I talk to you about like stocks or crypto, you say the same thing that I've noticed, and that is I always look at the charts. So when I look at a chart, what am I looking for? Like when I'm trading stocks, like I mean, I guess that's your secret sauce.
I mean, there's no real secret behind it, but the thing about charts, so what I've learned, one thing I've really learned over the last 10 plus years I've been doing this stuff is that it's all patternized. Everything in life is a pattern. You know,
Yeah,
with our history, it's a pattern. If you look at like, okay, so what happened like 100 years ago, right? We had the Spanish flu, right? We had the flu pandemic, right? What happened 200 years ago? We had a pandemic then too. So what I'm saying is you have a lot of patterns in life, and that's because humans, like in general, humans are the only creature that will trip over the same stone twice. You know, humans make the same mistake over and over. And if you take that logic with stocks and just charting in general, you'll see that with stocks too. You'll see spikes up and down. And what I advise people to do is when it comes to charting, you want to look at the max or like the odd chart, which is like the entire history of that chart, like that company from start to finish, or not finish, but like current finish, right? Like today.
yeah,
So you want to look at that. You want to see the overall performance. You want to know, like, okay, well, what's the growth been like? If you look at GameStop, for example, okay, you'll see that it's been like steady, right? It was up and then it came down because they were closing stores, they lost money. So they became like not so profitable. But then you'll see like a huge spike because of what happened recently. What that tells you is like, okay, it's obviously losing money, but then like there's strong interest in it. Why was there a strong interest? And you'll see that it was a pump and dump. People were just trying to get rich off of it. And that's the kind of stock that can scare people away because you know it's going to go down in price. But then when it does come down, like you want to look at like year. So once you get that overall bird's eye view, and you saw like GameStop went up, right? You want to look at the year. Well, when did it spike? When did it start losing money? So long story short, what you want to do is you want to look at the overall performance. You want to look at 1 year, what's it done in the last year. Then you want to look at what's it done in the last 3 months or even month. And then from there, you break it down to even more. You want to look at the last week and then the last day. The reason you want to do the last week and the last day is because that'll teach you and show you where it's headed. Is it going down or up? If it's going down, then you know, okay, I'm going to wait a couple of days and I'm going to buy it when it drops to like $4, for example. Or if you see it's going up, you want to do the opposite. Okay, I'm going to wait for it to come down. Or if it looks like it's going to keep going up and you know it's going to be like a good amount of time that fits your strategy. Now, say you're buying a stock for like 6 months, right? If that fits your strategy to sell it within those 6 months, then you want to do that. It's all about strategy too. So that's another thing that you got to take into account is your strategy.
Ah, you know what this sounds like? It sounds like the way I play fantasy football. How many championships have I won, by the way, in the league?
Oh, you went there, huh? You went there.
Dude, I would have won this year if it wasn't for, I don't know, something happened this year, whatever. But I've won a lot in our league, right?
Yeah, you did. You did. Quincy, you were the champion for a good amount of years. We went out for sushi. You reap the rewards for this fantasy
Hey,
team.
hold on. You never did give me the PlayStation. That was a PlayStation 1 year.
Oh, I thought I did.
No, I don't remember. And then
I don't remember you.
you gave me the Digibytes the 1 year.
Yeah.
Are
Yeah.
those worth anything?
Yeah, I saw there were like 3 cents now. So I don't know like how many I gave you. It's been a bit.
Yeah,
But
that's been a long
that's the
time ago.
thing. That's the thing about crypto that I was saying. I gave that, it's funny that you bring that up. So I got another story for you.
Uh-huh.
Back in 2017, I used to do the contests like that at work. And I don't remember the specific contest, what it was about, but I remember the reward was 100,000 Dogecoin. So,
Are you
so
Dogecoin was that old?
yeah. So I bought, a bunch of Dogecoin. Back then, it only cost me like $2. So I bought $2 worth of Dogecoin. I think it was like 100,000. I don't know, whatever it was in 2017.
Yeah.
It wasn't even a penny. It was like a micro penny. So like I spent like $2 or whatever, like $5. I don't even remember the amount anymore, but I just remember it was like 100,000 Dogecoin. I'm like, what am I gonna do with all this Dogecoin? So I did a contest. It was like, yeah, it worked. So somebody had to like respond to the email quickly, and the person who did would win it, and the person who did respond, they won. I sent them the Dogecoin,
Uh-huh.
and I mean the thing about it is like, I gave them that Dogecoin, and now like, went all the way to like what 97 cents. So
Yeah.
that's what I'm saying. Like, yeah, I missed out.
Oh, yeah. So, wow.
That's what I'm saying. Like, that's the thing about crypto that people, it's like a psychological thing. And the thing about it is that it's not just crypto that's psychological, it's trading and investing in general, like stocks. So, like that GameStop story that I told you, when I had those shares and I saw it go up, psychological things started coming into my head like, oh my God, should I buy it? Do I regret selling it? There's all these things. And my advice is like, once you sell something, don't look back on it,
Yeah.
unless you're really going to buy it again. I mean, if you look back on it, just be like, holy crap, it grew. What happened there? Just look at it, but don't feel regret. It's like having an ex-girlfriend or ex-boyfriend, or an ex-fiance or whatever. It's like they're in a better place. We broke up for a reason.
Yeah. Oh my God. Man, that's some really good advice. Dude, I watched that guy, whoever that is, he's killing it right now with the Dogecoin. It's nine.
No.
I don't know. I mean, maybe it's just it sounds like a free money or something.
Yeah, I mean, so Dogecoin was created because the guy, I don't know, I can't recall his name, but the guy who created it did it just like as a joke, you know. It's like, oh, just this is just a joke. That's the cool thing about crypto. Like the community. It's like, fun. It's like there's memes involved, and they're trying to bring that culture into stocks too, like the whole meme culture. And I mean, it's pretty big in crypto. So like you have Dogecoin, for example, which is like a Shiba Inu dog,
Yeah.
and it's basically just this dog and it's a coin. And now people are trying to like take it seriously and say, hey, this can be used as money. Everyone's going to be using this later. I mean, I don't think it's going to be ever used as money unless people really take it seriously. And maybe they could. I don't know. Anything's possible in life, right?
Yeah.
But, I mean, it's just great to see like the community come together and for it to grow. But at the same time, it's scary because like you have Elon Musk who tweets about this stuff, and this guy like is so powerful because his tweets can manipulate the market. And
Yes.
if I were him, I would not be doing that because it's like there's got to be some legality behind that, because
Oh wow.
yeah, that's what I'm saying. Like for him to do that, that's a scary thing. And I mean, it's good for people who have it though, but you don't ever want to buy something when it spikes up like that.
Well, that's the thing that I've been trying to. I mean, I always get tempted to do that, but then I look at it like when Tesla was spiking last year. I was like, I was saying that, man, I got to buy Tesla. I got to buy Tesla, and then it just kept going up, and I'm like, it's good that it's going up, but like that's too expensive, dude. Like I can't. I don't
Right.
know. Like I don't know. It's a psychological thing, like you just said, man. Like
Yeah, it is.
I had to just hold what I got, and then that's when I found another one that was really good. And then you have the psychological game where like, oh, if you find one that's really good, and then it goes up, it's like, should I buy more? But now it's expensive. Is it going to keep going up? Then it's like, well, you missed your opportunity. You could have bought more. You got to bought in more in the
Right.
beginning, and it's like a whole game, mental game, I think.
Yeah, yeah, everybody has that. And the thing is, like, there's no cure for that because you're always going to wonder, like, second guess yourself. And that's why I advise people to, like, come up with that strategy, to
Come
come
up
up,
with a
like,
strategy.
yeah, it's always about strategizing in life. And you want to have, like, what's your buy, what's your sell. Because the thing is, I mean, you mostly see it with crypto. That's why, like, crypto is more for, like, advanced traders. Because if you have, like, a coin, like Bitcoin, for example, so you have one Bitcoin right now, it's almost like 40 grand, right?
Yeah.
And in 2018, Bitcoin was like 19,000. It dropped all the way to like 3,000 by the end of the year. So at that point, you have something like that, and when you're in that situation, you want to have something called a stop loss. And I mentioned this to you too. So what a stop loss is, like, say you buy something at like $10, right?
Yeah.
And that whatever it is, stock, coin, whatever, goes up to like $40. So you have an option there to sell it, right? Well, then say it starts dropping down and all of a sudden it hits like $20. Do you sell it or not? And I mean, that's a personal question that you have to answer, but that's what I'm saying. Like, it's good to have a stop loss. So say it does come down to 20 and you say, okay, well, if it goes down to 20, at least I get some profit out of it. I'm going to sell it. And then maybe it'll drop or go up. That's where the psychological comes in. And that's what I'm saying. Like, once you sell something, walk away from it.
Oh
Because
man, you got to definitely take your emotions out of it.
you do, because what happens then, like say you sell it at $20, right? And it goes up to 25, you buy back in because you think it's going to go up, but then it drops even more. And that's what's happening right now with GameStop is because people, it was at $300, 320 at one point, right? Now it's at like what, $60. So people think like, okay, it's gonna drop or whatever, and then it goes up, a little bit one day, somebody might be buying it thinking it's gonna go back up. And that's why I'm saying like it's very important not only to have a strategy, but to look at the charts. Because if you look at the grand scheme of the chart, you'll see, wait a minute, it had this huge spike. It's just gonna go like this, it's gonna keep going down. You'll start to develop like the eye for it.
Oh man, check the charts.
Yeah, there's a couple of sites like Investopedia. I like to refer to this site because it's funny that I mentioned patterns because there's names for these patterns too. So like you have things called
Oh
like
really?
Candle. Yeah, there's like these crazy names that I mean, even Bitcoin invented a new chart name. If you look up Bart Simpson chart, you'll
Bart Simpson chart?
yeah, Bart Simpson chart. You'll see like Bart Simpson's head with the spikes of the chart. And I mean, there's inverted Bart Simpson too, and it shows like the drop. Yeah, like there's all these different chart names. Like you have cup and handle, you have head and shoulders. I mean, these are all different pattern names, and these are things that you want to familiarize yourself with because you can see them. I mean, you even have to own the stock or the coin. You can just see it just by googling, like Tesla, for example, and you just like have the little example of a head and shoulders chart, and you'll be able to identify it. So it's pretty cool.
Oh man, I got so much to learn, man. So I'm gonna go on Investopedia, and they have those charts, like the name,
Yeah,
the type of charts to look for.
yeah,
And
they do. They do.
I feel like I'm there's a part of me that wants to get in the frenzy with a lot of stuff. Like I would say that I'm not a day trader, but I have people who are not a day trader, but they'll get in the stock and like trade it the next couple of days. So I don't know if that's day trade or whatever that is, but like most of the stocks I buy, it's like I'm trying to hold them for like years. And I don't know if that's the best strategy, but I think that the way I see it is I'm doing too many things in my normal life to be tracking this stuff. So I'm
Right.
not gonna like buy it. It's like I don't know. Maybe I'm losing out on money. I don't know. Like
No, you're not. I don't think you are.
but like I guess that's my strategy. Like
Right. That is a good strategy. You know what I've learned because of the fact that I'm not a millionaire, you know, because the fact that I used to do that strategy where I would buy something and I would only hold it for like half a year, you know, I would lose money. For example, like a year ago, I had 300 Ethereum, which would have been worth a lot now, right? But I bought 300 Ethereum and I sold it when it was like 200 bucks, 300 bucks. And I'm like, oh, this is a good profit, right? But looking back, if I would have held it today, Ethereum is worth $1,700. So
oh wow.
that's an example of like trading strategies that you really want to think about and develop because of the fact that as we mentioned before, day trading does work. Like people do make money off of it, but they got to work hard for it. They got to trade. There's a lot of dedication involved. And then you got to think about the taxes too, because when you day trade, right, if you make a certain amount of money, it puts you in your own like tax bracket as like a self-employed. So you're considered self-employed if you make a certain amount of money as a day trader, and then you have the short-term capital gains. So depending on how much you make, it'll tax you on that percentage. And if you have a job outside of that, it'll put you in another percentage. So there's a lot of like different factors that you got to consider if you do day trade. And the scary thing that's happening right now, Quincy, is that you have these apps like Robinhood and Webull, right? They give you those free shares. People get those free shares. They'll buy more of it, right? And then they don't realize at the time because they're holding it less than a year, they're trading it like short term, and they're considered day traders. Like somebody might not even realize that they're doing day trading because of the fact that they're trading like a stock. Like say they trade the same couple stocks 3 times a week or whatever, like every couple of weeks. I mean, that's in a year that adds up. You know, it might be
Yeah.
like, oh, I'm just going to trade it like Monday or whatever, but that adds up. So then at the end of the year, once they start calculating things up, they'll be like in for a shock because then they're going to see if they had a profit, like say they made $20,000, but then they lost it all, they're going to owe money on that 20,000, regardless if they have it or not. So that's where things can get expensive. And then if you take crypto, if you go into the crypto world and do that, and you're day trading day and night because it doesn't close, you can have a ton of transactions that way. So like what I've learned is you want to let the market make you money. So if you buy something, always buy it. That's again part of the strategy. You buy it for like at least a year. You know, you really like value the company. If you really like Tesla, if you really like Sony, like say you have a PlayStation 5, you really like it, buy that stock, you know, stay with it. And there's stocks out there that will pay you dividends, which is like free money. You know, it's like a savings account. So
You know that, but that's boring, man. That's boring. But
that's
you know what? Like that's the best advice because I mean I can't every way I try to look at it, I try to make it more like I try to do more, but like that what you just said is the best strategy that I can think of, man. Like I mean, I see it sometimes. So there's some days where I just watch it. I'm like, oh, I should sell right now, but that's not my strategy, man. It's,
Right.
it's it's not my strategy. So you got to be disciplined. I guess you could say disciplined. You got to be disciplined about what you're doing. Stick to your strategy. Like you said with the
Exactly.
GameStop stock, stick to your strategy. Well, I think that's most of it. Like we've been talking a good hour. So anything else that you would like to? And I'm definitely going to check out those charts because you talk about it all the time, man.
Yeah. Yeah, I can share something if you don't mind my finger on the computer here. I'll share my screen. And actually, I can't share my screen. You
Oh,
got
you
to,
can't share your screen? Oh no, I
I
gotta
got to
share it. I
enable it.
gotta allow you
Yeah. So I'm going to
multiple.
show you some stuff.
Oh, that's good, man.
All right. So I'm going to show you one thing here. So this is my performance, just so people can see that I'm not all talk. So this is my performance for my account. So yeah, I bought in, like I had this thing and I never used it up until like, a year ago, I opened a Roth IRA and I'm like, you know what, I'm going to just open a Roth IRA, throw in some cash in it, open a trading account. And I mean, this has been my performance and it's all about strategy. It's all about buying the right thing out there, investing in the right company. And I mean, this is my growth. And I mean, it says 3 years, but it's since last year. So obviously there's a lot of other factors. The market is doing well,
Yeah.
but about getting into the right company. So
So what is the purple line? Is that's what is that?
that's that's my performance. And then the other one is like the Dow and the Nasdaq.
Wow. So you outperformed the Dow and the Nasdaq by what 800% almost.
Yeah, yeah. So
Nice, man.
yeah, I've learned a lot in this amount of time that I've been doing this. So that's why I'm saying, like, you want to really think about your strategy and you want to come out with what you're going to do, and you want to really think about it. And it's all about strategy, like I said, because if you start like trading too much, I mean, this is like from not so much day trading either. I mean, I did buy and sell a couple things, but it's all about diversifying too. I diversified what I had, and this is what, how it grew. So the other thing I want to show you too. So I'm going to share
Okay.
another thing. So this is Investopedia. So yeah, this is the site right here that I talk about all the time. Like, I mean, even their homepage right here, talks about like news and stuff, but there's education here. So you can learn about strategies here. They have investing essentials, fundamental analysis, technical analysis. I mean, they have all these cool things on here. They talk about stocks, mutual funds, like all the differences between them. So yeah, they talk about after hours trading. They break down all the terms too, because that's the other thing. Like you have all these crazy terms, like 51% attack. You have all the different
Yeah.
IRS in here. I mean, they talk about everything on here. So if people really want to get serious about investing, I recommend doing this because it is a mature financial responsibility because you are dealing with your future and your money.
Mm. So what do you recommend a person to start if they were to go on the Investopedia? What if they didn't know anything? What would you start?
Yeah, I would just start like what I just showed you, like with the terms, learn the terms. I mean, learn the terms that are important. And then I would also suggest that you start to look at like the different charts, the patterns, because you'll recognize them once they're out there. So
Yeah, I know. I check the charts. I'll like when I do digital marketing, I'm checking charts. That's pretty much what I do all day is check charts. So hopefully that comes in handy um, about checking charts, man.
yeah, it does. It definitely comes in handy. Like I said, I mean, the examples are out there. You don't actually have to own anything. You can just research it, learn the terms. And the other advice I give people is like learn the taxes behind this stuff because, in different states, there's different types of taxes. Like I know in Tennessee, for example, there's no state income tax, which is great because if you buy and sell on there, you don't have to worry about taxes. So,
Wait, you can buy and sell in Tennessee without paying, but you still have to
well,
pay federal
not
tax.
states, you'll have to pay federal, but you won't have to pay state taxes.
Wow.
Yeah, there's no capital gains tax out there. So you can like Illinois, for example, which has some of the highest taxes in the country. I mean, you pay for your taxes there for for your stocks and crypto. So that's another thing to take into account too, is if you're day trading, you have to, pay taxes, federal and the state. So it can get costly.
Jesus Christ. So like I'm holding stuff right, like I got crypto right now. Like
Right.
what if I move? If I move to a state that doesn't have taxes, like how do they what do I just keep my books as far as like I moved on this date and this is when I um okay.
Yeah, you do that, and you have to let the exchange know, about your new address. And I mean, once you file your taxes and everything, when you get the forms and stuff, you just put in your new address and where you're registered at. So that'll help with that. But yeah, I mean, like I said, that's my advice there is learn the taxes, learn the patterns, learn the terms. I mean, the terms are good to know because a lot of people don't know what a short seller is, or like a when someone does a short squeeze. There's all these weird terms that are out there. So you want to learn those. And then the fourth thing that I want to say that's important is, like I said, get that notebook, get that piece of paper, and write down those three terms, those three questions, and really, get down into why you're doing this, because trading is very personal. It's like you said, it's emotional. It plays with your emotions. It's psyche. Like you really want to, you really want to know what you're getting yourself into, because I mean, yeah, the charts look great, the money's there, but you can easily lose it. And one final thing I'll say is, whenever you do invest into something, ask yourself, how much am I willing to lose on this? Because in the end, I mean, that's more of what can happen than anything else. If you go in with that mindset, then you'll feel better if you do lose it.
Yeah, that makes sense. That makes sense. All right, man. Dude, I really appreciate this. We're
Yeah,
definitely gonna have to do this again, man.
yeah, definitely let me know. Yeah, we do this again. I can start talking about, like, what's out there, things that I recommend. I can talk about coins too. I could start getting to more into charts. I can show you the stuff that I see.
Yeah, cool. That would be amazing, man. I love charts, man. Uh, I'm gonna show you. I'm gonna marry it with my fancy football skills. All right, let me. We'll talk, man. Hold on
Okay.
a second. Uh,